Good afternoon, everybody, and welcome to Live Market Analysis USA edition. My name is Carl Capolingua. I'm the market analyst over here at ThinkMarkets, and it's a pleasure to be with you as we head over to New York and try and find some great stocks to add to our portfolio. Now, if you don't know, I am based over here in Australia, and mainly I do have Australian listeners who are stuck with their old BHP Rio, Fortescue, and a few banks. But we are going exploring today. We're going to find some great stocks, no doubt, given what's going on there with some of those US indices. Just a couple of housekeeping items before we get started. It's really simple. It's Q&A. Over to you. Ask me anything. I'll give you my best technical and fundamental analysis reader on any US stock you are interested in. Let us, with that in mind, head over here to the AMI broker screen. It's just a piece of software. Don't panic. It's no different to the charting software you're using. It's not linked to any brokers, even though the name has broker in it. It's just where I do my analysis, and I can program it and get my wonderful trend ribbons going. Okay. But any charting package you have, no doubt you'll be able to do what I do. And just a quick note on those trend ribbons, if you're not sure what they are, I've got nothing to hide here. Everything I know, I'm trying to get into your brain. Okay. I don't have any courses to sell or, programs or anything like that. It's just my knowledge trying to get into your brain. 21 EMA, and with that in mind, ask me a question about anything you want. 21 EMA, 34 EMA, that's my short-term trend ribbon. It's generally where I start. We're not going to stay here on zero, by the way. And that tells me what the short-term trend is doing, obviously, whether it's up or down or intermediate, using the traffic light system, green, amber, light pink, and the long-term trend over here again, 144, 233. And that is, again, dark pink if it's heading down, amber if it's intermediate, and green if it's going up. I do have a request coming through here, beating you all in. It's one earlier on from Twitter today for JBD31. Well done. They have asked for UNH, which is United Health. There we go. And let me just get my default zoom going there. And it's a great place to start because we can very quickly discount it from my prospective buys. Now, this doesn't mean United Health isn't going to be the best stock over the next 12 months. I don't know. Here's a little bit of a whispering behind my hand. I have no idea what's going to happen in the future. I don't know what's going to happen tomorrow, next month, or next year. But what I do is look at my technicals to give me an idea of probabilities, what's more likely to happen. And I can tell you that when the trends are pointing down, I think they are pointing down, but we've still got amber here on the long term, but let's face it, it is about to go down. And then we've got down on the short term. That's not a good start, okay? Generally, I'm going to skip over this and move to the next one and the next one because I want to find that double green, typically. Now, I can go amber on the long-term trend if the green on the short-term trend is amazing and there's some price action and candles. We'll talk about those in a second, but this is not one. I'm thinking I'm going to move on from this, and no disrespect to JBD31, this is not going to be the best stock we're going to find today based upon the probabilities of what we think are going to happen next. We don't know, but what we think, okay? The candles are predominantly black. That's another thing. The price action is lower peaks, lower troughs, okay? Lower points of supply coming in, indicating that supply is building in the market. So just to show you there, POS and a cluster of POSs there. And when you get that cluster of points of supply, it's more reliable in the market. We need to take it more seriously, don't we? So there's our problem there. As I said, candles predominantly black. How do you get a black candle? The price opens at a particular level, and during the day it's heading down, and despite its best efforts, despite all the demand in the market, there's just too much supply hitting that demand, pushing the price down. You close lower than your open. That's giving you the black candle. So it's speaking to you of these programmed sell orders in the system, these algorithmic sells from big fund managers who are saying, look, this is not the best reward to risk out there right now in terms of their earnings, their outlook, and how they're placed within the US economy. This is not where I want to put my money compared to so many other things, and we're going to see some of those other things. Okay, I think that's both a good introduction, but also a good place to move on from there. We're going to go to this next request here from the same person, which is this one, GE Healthcare Technologies, which doesn't have a lot of data, so I'm guessing it's a fairly new listing. But what I can see is pretty good. Hey, instead of all those black candles, we're seeing predominantly white candles. We have seen a bit of supply come in here. Note also that supply, it is important because it happens after this candle. Note how we change. Like we're going up, it's all hunky-dory, we're happy days, chugging along through here with predominantly white candles. And then we have an event. You've got to remember, technical analysis is just a reflection of what's happening in the fundamentals, okay? The chart is going to reflect the underlying fundamentals and, more importantly, the outlook for earnings going forward. So something happened there. I'm guessing it's earnings, and it disappointed the market. You can see almost clear as day how we've switched from white candles to black candles because the market is saying we want to sell now. We're not as happy with this. Now, to be fair, we've had a pretty decent pop back up over these 2 days, and that's encouraging. But there's not enough in it, both in terms of, hey, enough market data to even give me a long-term trend, and there's not enough in it in terms of this fledgling turnaround here. These 2 candles, there's not enough to get me in. What could get me in? I noticed I didn't even bother drawing these lines on the last chart because I think so much needs to happen on UNH before we're going to get a buy on it. But let me see, even we're seeing supply come in here. It's the same residual supply that's been in the market since this candle here. And I'm going to comment on that candle in a second. But let's see how that supply works. We might even get a little bit of a pullback and see this little short-term trend zone coming in here. What we find on the way up, you can see how it acts as a support zone. Okay, on the way down, it acts as a resistance zone. If you don't believe me, go check it for yourself. On thousands of charts, you will find this is the case. So we might even see a little bit of a pullback in here and then a flick back up. And really, it's only until we see the right candles in that light green zone, and we're going to see what the light green zone is in a second in there, and we're going to see now what the right candles look like. And I don't mind drawing these at the start because it means I won't have to draw them later on. And that's going to be part of it. And then we're going to have a line pointing down. And we're going to potentially have the best buddy of this candle, which looks like this. Okay, and we're going to label it our demand buddies. Okay, our demand side candles. Okay, and if we see those popping in that green zone, then I'm going to start to get interested, and it would probably even take a close above this little supply point then. Okay, the problem with this, and again, I'm going to move on very quickly because I don't want to waste time on things that I'm not interested in buying, is this. I'm going to say that's very close to, I know there's a little bit of a lower shadow, but when you consider it within the context of that huge rally it had before that and all those white candles, it is a sudden and important shift in the market's thinking, and I'm going to call that a species-ending event, and that really does make it very hard for me to get too excited about this one. Okay, we didn't quite find the 2 we're looking for just yet, I feel, but JBD 31, don't be disheartened, okay? Hopefully I'll bring something to your attention that you do like, or you can maybe find an affinity with. It looks like a couple of healthcare companies there you're interested in. Let us try that again. BATRK. Try that again. BATRK. Liberty Media Braves series. Now, I've got no idea what this is. Not that it doesn't matter to me, to be honest, but it looks pretty good, and that's as far as I'll go on it, Phil. And great transition from the last ones we've talked about because we do have our short-term uptrend. You can see how it's supportive on the way up. You can see how it resists a little bit on the way down. You know it's a little bit flippant. It's a short-term trend, but we know the long-term trend is far more reliable. We know that when we hit that long-term trend and we get the white candles coming back in and we get the price action heading back to high peaks and troughs, that's usually a pretty good time to look at stocks. Where does it leave us now? Well, we've still got a nice short-term uptrend in place. The long-term trend is still okay. Where I think this one falls down, and it's not falling down by a huge amount, is that the price action isn't ideal. I'm not too fussed about this big candle here. I don't think that's a species-ending event because look at that long lower shadow. And don't forget those long lower shadows, we talked about the demand buddies, represent excess demand, okay? And if we're not sure, let me just quickly, GEHC, only going back here, but not to talk about this company again, but to talk about the candles, so I don't have to draw them again. And if you think about on this side, as we're heading down during the trading session, so the market's just open and we're heading down, don't forget, because we've opened here, Okay, this is the open of trading right here, and then this is the low of trading, but we've head down at the open, and that's because we do have excess supply in the market. But the only way you can get from that low all the way back up, not just past the open here, well, not to the open, but past the open, all the way up here to the high, okay, is if a considerable amount of excess demand hit the market. Okay, and that's why these candles are super, super important. This candle here is just all excess demand. Okay, is one better than the other? No, it isn't, because if you look at the top to bottom move, assuming they're the same size, there's the same amount of demand in each. They're just telling us slightly different things about the state of the market during the trading session. So that when I go back to here, BAK, oh geez, you got me, BATRK, you can see these shadows certainly aren't talking to me about the excess demand in the system. And we can see the demand zone. It's not just a point from that shadow, but there's a shadow here, there's a shadow here, there's some white candles in around here. So this is the demand zone. They're very important. Keep an eye on these because they give you great places to set your stop losses beneath. If you're looking to go long, they give you great places to bug out if you're already long. So for example, I wouldn't want to see us close with a big black candle that's going to look like this. So it's beneath there. Beneath there, the party's over for the time being, okay? Now, this is purely hypothetical, obviously, okay? I love the way that works though, isn't it? Because straight away, hopefully, if you've been suffering through my presentations long enough, your brain has gone, yeah, I can see what you mean, Carl. I've seen that before. I know that that's not good, okay? Hey, it's hypothetical. But the problem is that we do have a bit of price action which could precipitate something like that, okay? Because you can see our POS up here and our POS here. The second POS is lower than the first POS. And the only way you can get those POSs, those points of supply, to have the second one beneath the first one is if, there's something a bit nasty going up here. There's a bit of supply. There's a bit of excess supply up here, isn't there? That's what we're seeing. Up and around in this area, that is where it's happening. Okay, now why is there excess supply after really, to be fair, quite a sustained period of excess demand? Hey, I don't know. It's something to do with the valuation. It's probably something to do with just $40. It's literally just that simple. Often we find if stocks have spent a lot of time around $20, they'll stop at $40. If they spent time around 30, they'll stop at 40. Nothing goes up in a straight line, and sometimes people supply it for the silliest reasons. I think it's okay for the time being. I'm not going to call this a buy for obvious reasons, but I wouldn't call it a sell just yet. I've told you when it does become a sell. When I say sell, I mean if you've been on it for a long time, you're only looking to minus 1/3 if that black candle occurs. And for it to be a buy, it would need to do some other stuff like show me some price action that's showing this, where we're not seeing lower points of supply. We're seeing higher points of supply. And more importantly, we're seeing those higher points of demand as well. Certainly demand is building, supply is diminishing again, okay? I can go hold if you've got it. Not a buy, maybe a sell, and I've shown you when, okay? Is this one I'm going to throw to the Thomson Reuters Refinitiv Icon spreadsheet? I don't think so. But hey, every chart is always welcome here. I might not like it, but don't take that personally, okay? I only like what I know to be good based upon many years, many decades now of watching these charts and understanding what constitutes interest in a company and desire to be on and fear of missing out compared to just complete ambivalence towards a company. There's just feeling there's so many other better things there, and I just want to get the hell out of this as quickly as possible so I can get to all that good stuff. Okay, let's look at Raytheon for Therese. And I must go back to my default zoom. And I think this one's got some problems, Therese. I wonder if we've talked about this in the past. Maybe just remind me. I don't have any markings on the screen, so I'm going to suspect not. That's Kel Butcher. Let me just talk to Kel. Kel, I'm just in a webinar, buddy. I'll give you a call back just after I'm done. Okay, mate. If you don't know who Kel is the reason why I took the call is because Kel and I and Jason we're looking to do an event in the near future where you can come physically and see us speak. And just to prove that I do know Kel, he is calling me. Okay, from Kel Butcher to Raytheon Technologies. This is the key zone here. And that's the problem right there. If we fall beneath that, then I think we're in trouble. When would this, or if would this become a buy? I know that's very bad grammar, but if would this become a buy? Only upon a move back to the price action, some nice white candles, and I think we're a ways away from that. And some of the technical analysts would look at this and they'll go, oh, look, I think this is a great place to buy because it's at the bottom of the range. Clearly there's a range here. And, well, let's call it that. But there's also, we know from my technical analysis, a big point of supply there. So we know why it stopped. I don't think you would have been buying in and around 102, 104, even though you had great candles, because your reward to risk was shot. So we're starting to see here that, yes, you can have great setups, but if the reward to risk isn't great, you've got to look somewhere else where there is great reward to risk. So other technical analysts will say, oh, look, it's the bottom of the range, you should buy it. Look, it's not my style, and I'm not saying that's the wrong thing to do. I'm just saying it's not my style. I could buy stuff at the bottom of the range, but I at least need to see this price action get back to higher PONs, higher POSs, and then some nice big white candles come in, those demand side buddies, and then I could contemplate it, but it's not there yet. So I'm going to keep moving on this one. Let's go to MSFT up next. This one is for Jen. Type it in for me. And Jen is asking, I think, when to take profits on this one. Oh, Jill. Sorry, Jill. I'm going to tattoo that on my forehead. But I'm going to have to remember to tattoo it backwards so that when I look in the mirror each morning, Jill, before these sessions, I'll remember it. Okay, Jill has asked for Microsoft, which hopefully Jill is on and doing very well on. I don't think we need to take profits here. It looks amazing. I haven't told you to take profits yet, have I? For very good reason. We just haven't seen the evidence in the market that excess supply is coming in, and it's the excess supply that's got to hurt your trend. What does excess supply look like? Well, let me tell you what excess supply looks like. The candles that you need to be concerned about if you are on one of these rip-roaring uptrends. You got a winner. Hey, trading's hard work. It's hard to get a winner. Yep, finally we got one, right? The getting in is going to feel easy now. Finding it's going to feel easy compared to how do I make the most profit out of this? That's going to feel like the hard bit now. It's really simple though. It doesn't have to be hard. Watch out for that, Jill. Watch out for that, Jill, because they are the ones that are going to tell you not only that there is excess supply in the market. Why? Who knows? Who cares? It just is. Unless you go out and survey. Now let's have a look at the volume here. Look at the volume. So the volume on this day was 5.4686E to the 7. Now I'm guessing that's something like 54 million is my guess. Okay. For the mathematicians out there, shout at me and tell me if I'm right or wrong. 54 million shares of Microsoft traded on that day. I'm guessing it's not 540 million, but hey, it could be. I know it would be a lot, right? Think about how many investors were buying and selling that on Robinhood, tapping away there frantically in their mum's basement, trading their shares instead of studying for their college exams. And fund managers, all the way up to fund managers, all the way up to the Bill Gates Foundation. And they decided on that day that something's not right, even though it was heading up. Something wasn't right. Next day, you double whammy. And look, the price went down from there. Did it go down forever? No, it didn't, because that's not what candlesticks are about. Candlesticks don't tell you what's going to happen 6 months from now or 6 years from now. They tell you what's going to happen maybe 6 days from now. And certainly they did tell us there. So to answer your question, Jill, in terms of, hey, what should I do with Microsoft? There's absolutely nothing in there. There's not a single shred of evidence to suggest that we need to sell a single share of Microsoft. It's going to trade 54 million shares tonight, and we're not going to sell a single one of our shares. Where would we sell it? Probably not until it hits up here. Maybe there's a bit of a zone there. Let me expand that, because I do think it's not. I think it's a bit bigger than that. I think, if you look at that high there, 344. So somewhere between sort of 340, let's use round numbers here, and 350. We're going to be super attentive for those black candles in there. Hey, we're going to be attentive for them anyway, because they could appear anytime. That the market's not necessarily waiting for my level, but that's the level I do think they will come in. Until then, as I said, not a shred of evidence to suggest selling it. Can you buy it? I can't see any reason why you can't buy it. And you've seen me, as we've covered this over, the last few months, just keep typing plus 1/3. That's how my methodology works. I'm going to type another plus 1/3 on this today, because there's absolutely no reason why you wouldn't buy it. In fact, it's just taken out another supply zone. And this is how you build profits. This is how you build wealth, by initially dipping a toe in the water Okay, what does that mean? Dipping a toe in the water. This is what we do. The trend wasn't set on that initial foray into Microsoft. But we didn't throw all of our money onto it. We dipped a toe in the water because sometimes we don't know what's lurking under the surface there, right? But what we do is, as the demand supply dynamics continue to reinforce our initial thesis, we reward a winning trade with more risk and more risk and more risk and more risk until it does something to tell us to get out. Okay. Now, hopefully that answers your question, Jill. Amazon, Jill mentioning Amazon, let us switch out to there. And I feel so sorry for all of those people who aren't tuning in today. I get a fraction of the people tuning into these sessions compared to the Aussie sessions on Tuesday. I'm just speaking to brick walls out there in ASX land who don't want to listen to this stuff. But hey, Amazon, ever heard of that one? They're pretty big in online retailing. You probably bought something from them in the last 30 days. But their shares are starting to look good again. And what's the significance of their shares starting to look good? Well, you know, like this could be important here. And much like that Microsoft trade over the last few weeks, you can see with my plus 1/3, I try and keep these markings on the screen so we can refer back to them. We've been adding some risk here. Is there any reason not to continue to add risk to this? The only thing I would say is that it's getting a little bit of a ways from my light green zone. We might see, therefore, a little bit of mean reversion, nothing to worry about, where we get another higher trough and some more candles to get in. If this had closed on its high yesterday, and you can see it was very close to doing it, I probably would have put another 1/3 on the screen, but I'm just going to refrain, and it's only just. And even as I'm saying that, my brain is saying, hey, look, you know this is still good. You can still buy it. But as I look back, perhaps there's a little bit of supply there. So I think, again, this is not an algorithm, okay? I think there are many features of an algorithm in what I teach you every week, okay? Because I'm very consistent. Hopefully you agree I am that broken record in the stuff I tell you. I don't pop up one week and tell you something, you go, wait a minute, that's not what you said last week, or that's not what you said last month, okay? So it's not a black box system, and there is a little bit of discretion in there, in that, and that discretion will come from experience, okay? And how do I know that I'm not going to put a 1/3 on this one today? I just did that little shadow, that little area there, distance from the green zone, but I can certainly say happy holder. There's absolutely nothing in here to suggest that you need to get out if you're on it, okay? Maybe we're just not adding risk until we get that little bit of mean reversion. Flush out some of that supply that's probably lurking in the system, those weaker hands, Robin Hooders that want to take a bit of profit because they got in at 105. They're not in it for a long time. They're in it for a good time. Now it's up to 120 to take a bit of profit. Flush that supply out. That supply will flip into the demand, which we know is building. It'll get locked into the demand side and there'll be less supply for the next move up. That's how prices go up, ladies and gentlemen. So happy holder on that one, Jill. Asking for SOXX. I'll get to everybody's today because usually we have enough time. Semiconductor stocks, look, I think that looks very good. I think you could have been adding some, I think, on this candle here, and I know that's hindsight, and it's frustrating for you to hear me say that, but that's probably the best place to get in. I mean, duh. It's just a little bit of a ways away, and we're at a little bit of a point of supply. Apart from that, look, we're talking 8.5, 9 out of 10 sort of stuff. Could I add some risk today, dip a toe in the water because that candle has closed so high? I think you can. And I think what we've seen is a close above that level. And let me just confirm it for you. That high there, 44482, 44534 wins out. So let me click on that, change that. So it gets exactly where it's supposed to go and then do that. Didn't quite close above that high. And therefore, we may see the manifestation of a bit of that excess supply come in over the next couple of sessions. Look, I'll leave this one up to you. I'm not going to put the 1/3 on it for the reasons I've explained, but it's very, very good. I mean, it's very close. Because if I look up from here, I'm actually not seeing a lot. We've done some work on this in the past, haven't we? I think I even said plus 1/3 back on this day, which didn't go very well at all, did it? If you did it. But I wonder, look, hopefully you held on and you're still in it. I can't say. And let's say that if it does break through here, then there's a fair whack of upside, I think, okay, between where it is and where it can get to. So 100% hold, sell is 0%, hold is 100%. And I'm just working out when we switch back to that buy. That's all. And last one for Jill here is Google. GOOG. Another one we've been looking to add risk to. This one, fortunately, has gone the right way for us. And I'm going to go ditto on Microsoft. I can't see anything in there which would tell me to sell a single share, and therefore I won't. If anything, it is the picture. Ladies and gentlemen, I implore you, this stuff doesn't happen by accident. And think about all the noise out there in the world right now. Those white candles are not accidental. Okay. Happy holder here. And hopefully, again, technical analysis gives you that, just that blanket you can wrap yourself in. That just gives you that comfort of, you know what, I don't need to listen to all that noise anymore. In fact, I'm going to turn off all the media. I'm going to stop looking at any internet. All I'm going to do is click download on my data and look at my charts. And I will never listen to any other rubbish external to that ever again. I think that sounds amazing. I think that's a wonderful notion. I'm going to go to Gemma also hitting me up on the Twitter there for CRWD, CrowdStrike, which looks pretty good actually. I don't mind this one. A great little segue from some of the others we've seen, because we can see that it is still very much in that long-term downtrend, isn't it? We can see signs, however, that long-term downtrend is changing. And as I said at the very start of this presentation, I don't mind buying stuff that's still technically in a long-term downtrend if the short-term trend is up, and if some of the other good stuff like price action candles are telling me to do that. And that's how we found Microsoft, by the way. That's how we found Google. That's how we found Amazon. Okay, they were charts that look similar to this before their recent run-ups. Okay, so maybe we're finding one in the making. Let me just zoom out a little bit. I just want to make sure in my brain that, you know, it's doing all the stuff it should do. You know, for example, well, no, didn't quite get there, but I think I can still claim it. But look how amazing my trend zones are. Geez, they're amazing. And then when you break through them, you know something's wrong. When they go amber, you know something's wrong. And when they fail to get back above them, it took a little bit of time there. But when that definitive break comes, it really is all over Red Rover, and you can see the strength there. So look, it's by just looking at that, it tells me, look, I think I can trust this if it starts to do this. If the leopard starts to change its spots in terms of the trend, of course, not in terms of the reliability of my model, but if it starts to do this, starts to act as not, this dynamic supply zone anymore, but starting to act now as a dynamic demand zone. And that was the key factor in helping me understand whether I could be buying, Microsoft and Google and Amazon. And I think we're getting pretty close. Look at this. I mean, the last time we were there, black candles appeared like you would expect in a supply zone. That's the manifestation of the supply. Yet this time, it's a little bit different, okay? It's a little bit different. I don't know if I should tell you this story, but I think it is important, okay? I think it is important to understand this, how the market shifts, okay? This time, it's a bit different, okay? Now, I'm remembering back just over 11 years to a particular sonogram my wife showed me, and she's a sonographer. And if you know who a sonographer is, they do ultrasounds and typically, your bits and bobs and but babies, right? And the first sonogram I looked at was a girl, and there was a certain parts of the anatomy that showed me that. And then she showed me this one, and it was different. Let me assure you, it was different. There was a different part of an anatomy there. And I knew at that point that I was not going to have, we were not going to have another daughter, okay? Something had changed. You get what I mean? This is a bit different here, okay? This is from here to here, it's different, all right? Instead of getting the black candles perpetuating themselves, look at this white candle coming in. Instead of the lower peaks and troughs out of that zone, okay, we had the higher peaks and troughs. The market is not as black and white as my personal life experience, right? Anything can happen. I was guaranteed to get a result in that case. But I think this is a bit different. Can I buy this? I think that's what Gemma wants to know. I don't mind this. I just want to get rid of some of these arrows because they're stressing me out. There's too many of them on the screen. I want to keep my price action though. So I think it's important to leave that on there. And let me get rid of that one. And maybe get rid of that one and join those two together. I think you could wait. Look, I think you could wait a little bit and see a little bit more confirmation. But I also think you can add some risk here. So because we've closed above this supply. So here's the static. So we've got dynamic, but we've also got static. Okay, and that's static. We've closed above it emphatically last night with that high close on that candle. In fact, just a tiny smidge off, but very good. This is super risky, right? So this trade 100% is one of these. Okay, it's one of these, and that's why we're not going to put. If I ordinarily invest $2,000 in my American shares, I'm going to divide that into 3 parts, and I'm only going to put 1/3 of it on it. But I think this is a plus 1/3, plus 1/3. Okay. Now, okay, ding, 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 ding. We finally found one that I'm interested in buying. Sorry, I'm making this about me. But in many ways, it is CRWD. Oh, I hate it when I don't have caps. CRWD. Try that again. And what we're going to do here is have a look at the valuation for CrowdStrike Holdings. And we can see error EOFYs. And I deliberately programmed that in to remind me for these sessions that I need to change that before I do any analysis. What we're seeing here is Thomson Reuters, one of the biggest aggregators of financial data in the world. They go out and survey various brokers. We can see they've surveyed 41 here. And they asked the broker, hey, what's your revenue estimate for CrowdStrike over the next 12 months? Okay, well, let's go out to FY27. What do you think they're like? How cool is that? And then they aggregate them together, find the average, and they put them in this Refinitiv Icon product, of which this spreadsheet is dragging the information out of. Okay, so this is not Refinitiv Icon, it's a spreadsheet that drags information out of Refinitiv Icon. And I can look at the consensus forecast going forward. I can also look at the data that's in the bag. Okay, and then we've got a percentage change over here. I do some fancy stuff over here to tell you what I think the value is. And then there's also some ratios down here for your fundamental analysts out there, your hardcore fundamentalists. 41 brokers covering it. Their average target is 169.76, which allows 20% upside. That's pretty neat. Let's go here to their ratings, because not only will they give us a valuation, they'll give us a rating as well, buy, hold, sell. We've got 13 strong buys, 28 buys, 5 holds, and importantly for me, no sells and no strong sells. So 41 different brokers, Citigroup, Deutsche Bank, UBS, Bank of America, Zacks, I don't know. All of these big investment houses, and not just a single analyst. I bet you're looking at CrowdStrike. There would have a few analysts working together to come up with this. Think of all the smarty pants involved. None of them thought bad enough of this company to sell it. So that is important for me. Next place I go is down here to the EPS line. And I want to see bottom left, top right. Okay, I want to see this company make money, grow earnings through thick and thin. For example, through a global pandemic will be... it's a January one. That one there, oh, look there or there, give or take, through supply chain shortages and chaos, through rising interest rates and, labour costs and stuff like that. Look, it is. That's what we're seeing. And then I need to see it's continuing to do so. It gives me a compounding growth rate for the look-forward period of about 28%, which is extremely impressive. Your average market growth, somewhere in the high single digits. Your average market PE in America, about 16. It wobbles from there. Okay, so we're getting far better than the market growth, but we're paying for it because the forward-looking PE, what the brokers are saying going forward, is that we're working off a PE of about 42. Now that sounds really high, right? Because it's way higher than what the market usually is, but you're getting compensated in the higher growth. So what it means is as your earnings grow, your PE comes down. So that if you look to 2027, if you want to hold on that long and take the risk, like the execution risk here, because these are all forecasts, it's starting to get closer, right? The question is that a reasonable target PE? I don't think it's the wrong one. What helps guide me is how it compares to the historical range. And because this is one that's only just started to make money over the last few years, that's less relevant, I think, compared to something that's been making money for 50 years, okay? I don't think it's unreasonable in absolute terms. It's a bit high for my liking. I tend to top out around 40, okay? And I can put 40 in there, and it brings this down a little bit, okay? What I'm going to say here is that there's nothing in my spreadsheet to suggest that the brokers have got it wrong. So I do think this one is at least fairly valued. If anything, it's probably on the right side of cheap. Let's head back here and continue our search. We are like that shark in that video I keep showing you, trying to just work through these opportunities and find the best ones and then go chomp when we see something we like. Okay, Haraji, we're asking for, actually I have to do one more for Gemma. and that is Costco. If you in Australia, you certainly know these guys. Oh, it looks super interesting chart. I mean, hey, the classical technical analyst will draw lines like this. They'll go probably there, and I see this so many times. I wish I could zoom it out. Oh, I kind of can, but I can't. So I want to normally what they do is they'll draw a big arrow. So they'll draw a big pennant like that, and they'll draw a big arrow heading up there. And I just think that is so dumb. That is, if you see that on any chart, on any social media, you need to unfollow that person. Okay, so what I'm talking about is if you see any sort of pennant or anything, and then a big line with an arrow pointing up. They're not technical analysts. They are pretenders. Okay, so let me delete that because that's not the way I do stuff. Because it could easily go down as well, and who cares? You don't know what's going to happen next. It's very flat. What I can say is that we've got an equilibrium here, okay? There's just about as many fund managers out there going, look, it's good value, just as many going, look, I'd rather be somewhere else. I'm not a buyer right now, but I could easily become one, okay? It would need to do, as you know, this sort of price action at the very least, probably a bit more because there's a bit of stuff going on here, isn't there? We've got a bit of stuff going on here, then we've got a bit of stuff going on here, and then we've got a bit of stuff going on here, okay? But I don't mind it. If you can see a string of white candles that kind of looks like this, then maybe I'll get interested. Not until then. It's a pass for me. No need to look at the fundamentals of the valuation on this one. Thanks for your requests, Gemma. Let us keep moving. Haraju has LZ. Oh, okay. This has got my attention. Certainly. Let me default zoom this one. Look, it's had a pretty checkered past, hasn't it, Haraju? But I think this is changing. And let me maybe cut a long story short, Haraju, because you know where I'm going to go with this. It's a plus 1/3, hands down. For the people that are going, well, wait a second. I don't like the sound of that. That just sounds really risky to me. Look, it is. It's extremely risky, okay? And that's why I have this model of just dipping a toe in. And if it gets better and better, we'll continue to add, okay? But I just think this is the key. See where that high is compared to that low there. This is what we call a gap. And it's not just a small gap. It is just a massive, massive gap. It's a massive change in thinking. It really is a massive change in thinking about this particular company. It's gone from, this is a horrible place to be in terms of reward to risk earnings going forward, to actually something amazing is happening. And I want to be part of this, and I'm happy to take the risk now. So just on the basis of that huge gap, the fact that it has consolidated that gap so well. And when you see these big moves up with so little response from the supply side, this is about supply side response. So I want you to, if this is our take, hopefully I give you one takeaway point each day. Super, I don't want to write super. I want to write supply. But this is going to be a super important takeaway point. Let's go today's super important takeaway point. Okay, but hopefully I'll give you one each time you're listening. And I want you to think about this idea of supply side response. Okay, supply side response, what it is. Typically, when something has a massive change like that, I mean, that went up, what, 25-ish, 30% in a day, right? The typical human programmed response, like an amoeba, you poke the amoeba, it does X or it does Y, all right? You poke the human and it goes, oh, I've got to sell that. It's gone up. It's gone up 30%. It's too expensive. I've got to sell, all right? From the demand side, poke the amoeba, the human brain, and it says, I can't buy that now. Why would I buy that? That's crazy. I'm not going to buy that now. I could have bought it yesterday, $8. I'm not going to buy it now. not this black duck. Yeah, I'm not stupid. I know I could have bought it at 8. There's no way I'm paying 10. That's just dumb. Okay, that is your standard program response, but it's not how the market works. So when something goes up a huge amount like that, we're watching for that supply side response. If you don't see any, guess what that means? The stocks, they're made up of demand, they're made up of supply. Supply is people who own the stock. So when there's no supply side response, consider the response of the people who own the stock. They said, yep, okay, good. It's gone up 30%. I'm hanging on. There's more in this. The demand side, they're the ones with cash. It's gone up 30%. They said, give me some more. There's more in this. Okay. So I could also write demand side response on that. But this one I think is about supply side response. There was none. It's still going up. Happy to add some risk. Let us check out, therefore, the valuation on this one. And let's go to LZ, Legal Zoom. Never heard of it. But if this is the first time you're hearing me, I don't care. It's not important to me what they do. In fact, the less I know about the company, in my experience, the less I've known about a company and what it's doing, the less I've followed the news, the better that trade's gone. So I've just shut up and followed the trend. Okay, let's make sure that these two match up first and foremost. And we're going to see that we do have 8 brokers, reasonably well covered. We've got an average target actually pretty much here. And that's because the brokers, after that big event, haven't yet upgraded their estimates. So we'll probably find that some of those target prices are going higher. Okay, that's a hunch. We do have 2 strong buys, 4 buys, 4 holds, and 1 sell. A little bit concerning. We don't really have much of an EPS line. I'm guessing a new company, perhaps. It's only just started to make money. But we do have a growth figure here going forward, 16%, much better than the market's average. Let me turn that off and go back to what the brokers are thinking rather than 40 as the default. And my model here is saying, look, at 22, I think that's really reasonable. I think a 23 PE for 16% is very, very reasonable. No complaints about this. I don't have a history really to compare it to, but just on the face of it, I'm okay with that. Look, I'm actually pretty close to the brokers on this, but I don't think it's expensive. I don't think there are any red flags here. Okay, and that's really all I'm looking for in those fundamental valuations. Is there a red flag to prevent me from doing that plus 1/3? And I don't think there is. So happy to go with it. Let's go with Haraju's second choice here, NVTS. I'm going to pick up the pace actually because I just saying I've got more requests probably than we've got time left. I'm going to go pass on that one, Haraju. Probably a buy in the near future, but I think you know why I'm passing on this. We've got that upper shadow. So you can see the contraction in the candle ranges and the body sizes and the increasing in the shadows. So supply is starting to have an impact here. Supply side response, right? We are starting to see, we are starting to see a supply side response, aren't we? Okay. So we're just going to take note of that and say we're going to hang in. Well, if you've got it, I don't think you need to sell it. I don't think there's so much of a supply side response that we need to get at. If you're the most jitteriest, nervous person in the world and you were on it, you're making some profit, happy days for you. I'm going to leave it to you. I'm not going to put minus 1/3 on the screen because I don't think you need to, but I'll leave that to you. But I'm not a buyer here. Okay. The other reason, because of the supply side response, the other reason is we're just too far away from the light green zone. So that one's a pass for me. But if you've got it, then you're doing very well, and I think you can continue to do so. Okay, let us go to Daniel, who's asking about MercadoLibre. It's a bit of a popular one on this show. I was going to call it. We're not really a show, are we? What are we? I don't even know what we are. I'm going to get rid of those because we were saying, hypothetically speaking, if it was to do those candles, okay, then we'd be selling 1/3. Good news is it hasn't done those candles. Okay, I'm going to get rid of that because it's getting in the way of my analysis. I'm going to move that over here. Okay, so we said that we had a major supply event and we're going to be super attentive for those candles, which we didn't see. There's a line there. Let me get rid of that line. And the good news is we didn't see it. Okay, so we're moving through here. I think it's fine. If there was any concern coming from that major supply event, then I think we're starting to move past those. Happy holder. Could I buy it? That supply side event still makes me a bit nervous. I reckon we'll find other ones today. I don't mind it. I'm very close, but I'm a little bit distrustful of that. Okay, that's all. What's interesting though is once you did see that supply side event, look at the supply side response, look at the demand side response. Actually, the buyers did come in. So many times you see these big black candles and they are species ending events. That's why I'm so nervous about them. But actually the demand side response, all things considered, has been pretty good. Happy holder here. No complaints at all. And I will leave this minus 1/3 because if we do get beneath there, that's where you would be exiting. But until then, it's fine. Do I write plus 1/3 on this? I'm going to go back to my Zoom and see if it's warranted based upon previous points of supply. I know it's tough to see now, but there is one in here potentially. It's a bit of a ways back, isn't it? Sort of from 2021, but let me just draw it on screen so I can see it. Look, I think we're working through that. I don't mind this one. And the next one's not until sort of up here. Okay. So yeah, just reiterating, happy holder here. Do I write the plus 1/3? I'm just going to go pass. I think it's very good, but I wonder if there's something else I can find today, Daniel. But I'm guessing you're on it, so stick with it. TXRH. Let me try that again. Oh, this looks good. Texas Roadhouse. Yeah, it looked gone for all money there, didn't it? On that short-term trend. Obviously, the long-term trend is held. Long-term trend is doing what it's supposed to right there. Oh, look, happy holder. Am I a buyer? Let me zoom out again and see where it looks like blue sky from here, aren't we? Another way to zoom out is just click on the weekly chart. Look, it looks very good. Let me just wait for any form of supply side response. And it might be famous last words, but maybe it'll keep going. But just on the basis of that little bit there and a little bit here, let me just see, okay? And I'm not saying it has to go down, but I'm just saying even just a few candles that just consolidate in the green zone. Where's the green zone? It's about to appear on the screen. Okay, see how this area here was very clearly a point of supply from the past, right? Oh, yep, due to go. Oh, let me put the S in there. You get what I mean, POS. And we do expect that points of supply, once we take them out, tend to become points of demand. So let me just see that confirmation in the market, because it has had a good run. So that mean reversion is possible, especially if we're starting to see a little bit of supply manifest itself. So I think this is one we have to keep watching, Perry. I'm not going to go plus 130 today, but if you've got it, certainly holding. There's nothing in there to suggest that you would be selling at all. Okay, let's go here. We won't do the big talk, but given it's one we do think is pretty decent on the chart, let us then check it, and we're going to go price target, roughly a fair value there, Perry. In terms of ratings, we've got 5 strong buys, 5 buys, 12 holds, 1 sell. Earnings line, there was a problem here. COVID, no doubt. Again, we can forgive that if the rest of it's good, and the rest of it's very good. 15% at 21.3, nothing untoward there, and that 21.3 is pretty good compared to its 5-year range, and no issues paying, say, 21 for 15% earnings. My model says it's a bit cheaper than the brokers think. Okay, so no red flags there for you, Perry. Let us keep moving then. I've been seamless on my changeovers today, ladies and gentlemen. I think I deserve a big round of applause for that. I can't remember, was it the last one? Was it the one before I said MELI? It was MELI. It was MercadoLibre. I said, look, I might just find something, it looked good. I might find something that just looks a bit better. There it is. Okay, nothing, no further analysis required. I think we all agree, right? If this is the first time listening to me, you have no idea what's going on. If you've been listening to me for a while, you know exactly what's going on. Hey, what's today? What's the theme of today's presentation? Supply side response. Are you starting to get it? Do this with your heads if you're starting to get it. Okay. Okay, let's head back over here then very quickly and type that one in. And it's C. Who's this one from? This one's from Chris, is it? F-I-X. There we go. Thanks, Chris. Okay. Not a lot of broker coverage. Okay. Doesn't mean we can't trade it, we can't value it. Just take what you see with a pinch of salt. There's not a lot of broker coverage. 8% upside, 1 strong buy, 1 buy, 2 holds, no sells. That's great. EPS line, a bit of a wobble here. Interesting, but otherwise it looks good. 14% is good growth. We're not paying all that much for it. I think 20 is pretty reasonable. It's pretty reasonable based on the 5-year range. No complaints about that. I'm not going to say it's worth 26% more than where it is right now. That's not what this is about. That's not what the spreadsheet does. It just says there's no red flags here, and I'm happy to defer to the broker's thinking. And why do I have that thinking about my fundamental analysis? Because I can't do analysis better than these 3 guys, all the 41 brokers that were looking at Google or Alphabet or whatever we looked at the start, okay? I respect that they are experts in what they do, and I'm not here to argue with them. So who am I to say my spreadsheet's better than theirs? Okay, that is just silly. It is not my style. Okay, VRSN. How am I going for time? Terrible as usual. Looks great. Happy holder. Would I buy it? Can't see why not. I mean, let me just see that. Maybe that's just keeping me out of it, but happy holder, no doubt about it. Could I add some risk? I could. Look, if the market keeps going, this will go. Is this the best one we're going to see today? I don't know. Happy holder. Let me say that. Happy holder. Am I a buyer? Look, in isolation, if this was the first and only stock we looked at today, I would write 1/3 on the screen, but that's just keeping me back. Okay. Let's keep moving on this one. SMCI. This is for Perry again. I hate streamers. I haven't forgotten. Oh, jeez. Holy moly. We've done this one. Hopefully we've done this one, Perry. Hopefully I told you to buy it. I really do, because it's what a great move. And again, if you didn't, because I guess we looked at it here And it had that shadow, and I was saying, look, wait for it to get back to the green line. I think that's what I said, because I can see from my scratchings and I know what I tend to say, right? So that wasn't bad analysis back then. Hey, I can't check every stock in the US every week, but let me just say, there's not a lot of signs to buy down here, right? I wouldn't have been telling you to buy down there. There's not enough in it for me. Even with those 2 white candles, they're very good. But the short-term trend wasn't there. And, the long-term trend, maybe we hadn't reached it yet. But this candle here, again, because the theme today is all about supply-side response. That's the candle there that you had to look at, really. And any signal after that was a buy, probably even around there if you didn't go earlier. Look, I think you can hold it. I can't buy it now, Perry, for obvious reasons. It's just too far away from my light green zone. I know that maybe final last words, but I just want to find stuff that's a bit closer, because, hey, I don't fret missing an opportunity. I don't have FOMO. I know there's going to be another opportunity coming down the track, and I'll get onto that one, okay? But well done on that if you've got it. Happy holder. No reason to sell, and no reason to sell here either. So amazing. But here, there were plenty of trade opportunities here, because the short-term trend had turned back up. Long-term trend was amazing. And here's your big white candle here. So you're all over this thing right through here, Rambus, and you're doing very well right now. No reason to sell. Happy holder. Can I buy it? Just too far away from my light green zone. Okay, but well done to you, Perry, for finding those. UBS is the next one. I think we're looking for a short last time, David. I wonder how you went on that. I'm a little bit concerned about that big white candle, so I'd be tightening up my stop losses, maybe going to a break-even trade on this, okay? Or if you're looking for a stop to go just above, maybe. See these little shadows here? That's where your stop would be if you wanted to give it a bit more room. Because, again, we're not looking at this in isolation. We're saying, hey, I went short on something, it didn't work out, woe is me. That was a bad idea, never going to do it again. What we're doing here is we're trying to put some hedging into our portfolios, a little bit of insurance. And that's what insurance is about. When you have a car accident, you don't go to your insurance company and say, hey, you bastards, I didn't get my premium back. Well, no, that's not the right analogy. What you don't do is when you get to the end of the year on your policy and you didn't have an accident, right? And you call them up. Imagine that. You're calling up your insurance company, wait on hold, press 1, press 6, press 4, finally get to an operator. You bastards, I didn't have an accident this year. It's okay to lose out on a few shorts that we have in our portfolio. That's our insurance premium, because if the market tanks, we're going to lose in our longs, and this is going to help pay for it. Let us keep going. Is it too late for NVIDIA? Is it too late to get in? Gosh, I've got to learn how to type. NVD. No, I don't think it's too late. You can see, I'm sure we had covered this before that plus 1/3. I'm sure we did. But anyway, you can see where we've been looking at to buy it. I don't think it's too late. This is an area up here. Oh, now I'm starting to think maybe it is a bit too late. Look, happy holder, 100% unequivocal hold. Some people would look at that and say, well, you've got to get out because it's gone up too much. No. This is fine. And I think we're starting to see the makings of a really great bull market here, ladies and gentlemen. I'm getting really excited by just looking at some of these charts. Look, see, the problem with this, Jennifer, is, that's Ausbiz. Ausbiz is telling me to dial in. We're going to be done here. So if we're getting in here and we want to put our stops down here, I'm not sure if we're going to make the reward to risk on that. Look, the chart looks amazing, but on the reward to risk basis, perhaps we are too late. Stop typing in anymore. I can't do them anyway. I think we did Amazon and Google for John, and on the streamers. Sorry, TGTX. This is going to be super quick. Looks great. Can you buy it? Oh, let's just wait a little bit. See, this, I don't like this lower peaks, lower troughs, and this big supply candle here concerns me, okay? Let's just give it a bit more time, okay? So let's see maybe even just the smallest inkling that we're going back into higher peaks and higher troughs, that this short-term trend zone is acting as dynamic support. Get the right candles. I'm going to start to look at that one in a far more favorable light. If you've got it, I can see a reason to hold it though, because it's not a train wreck yet. If it starts to close beneath there, I'd be lightening the load, okay? Thanks, Adonis. CCL, Carnival Corporation. Super interesting. Do you know what these guys do? Cruise ships. Maybe that's going to bounce back. I don't know. That's fundamentals. I think it looks very interesting. Could I buy it here? I'm not sure if it's as good as some of the other turnaround plays that we've seen today. I mean, this is a bit of an issue here for me. And if you're the person that wants to take the punt in light of that supply zone that is so very close, I don't mind. Okay, I don't mind you taking the punt, but I'm not going to take the punt. Okay. But it's very good. Happy holder if you've got it. It's not a sell anymore. That's good news if you've been suffering through it. It's not a sell anymore. Simon says MSI, and then I absolutely have to go. Sorry, I think I missed one from French Z. MSI, try this one. Maybe I'll get to you. Oh, amazing. Plus 1/3. You know why. I want to put it on there so I can come back and take credit for it later on. And then ACAD. Oh, I'm so glad I did that one. Plus 1/3 there as well. I think we are done. I'm going to go back here before literally Ausbies start calling me and say that you should obviously join all the other sessions that we do. There's not enough people watching me on Fridays. Tell your friends that they have to get down and watch Carl on Fridays and start trading US shares, because if they don't, they're about to miss out, I think, on what could be an amazing bull market. And if you're going to trade with us, and tell your friends to trade with us as well. If you're watching me on any of the streaming services, click subscribe and please hit the thumbs up button. It's always great to know that you love what I'm doing, and that will enable me to continue to do it. Thanks for joining me today. All the best for your trading and investing. Till we catch up again. Bye-bye for now. I have to mention that everything we've talked about today's general advice. Consider it carefully before you act upon it, and head to the website, download our product disclosure statement for more information. Thank you. Bye.